Hello everyone, welcome to a new video. Today I will be analyzing the company of BYND, which is one that I'm very bullish about, so note that this video will be positively biased. However, I will not only of course be discussing the positive points, but also the challenges that it's facing at the moment and that will continue to face in the future. Additionally, they just reported earnings this past Thursday, February 25th, which means that we have super fresh information on how the company is doing. There were in the earnings call basically some very good news and some not so good ones that we will of course be covering today. But before we go into that, let me quickly give you a brief overview of the content of today's video. Firstly, I will be giving a short introduction to the company and its products. Then we'll be looking at the existing partnerships that they have with other businesses and also the new ones that they just announced, which were, I think, very exciting. Followed by an analysis of the different competitors that they have and also the industry potential. Then we will look into the financials that they reported, especially looking at the fourth quarter of 2020 and also the full year. And finally, as always, I will be giving my personal opinion on the stock, my thoughts and my future plans with it. Quick disclaimer here though, I'm no financial advisor and I do this video just for entertainment purposes, so please note that I take absolutely no responsibility if now the stock crashes and you lose a lot of money. But with that out of the way, and after I remind you that if you enjoyed the video, it would help me out massively if you could give it a like. Let's go for it. BYND is a company that, as most of you will already know, produces plant-based products that try to resemble as much as possible to real meat. Amongst their products, we find sausages, burgers, beef or meatballs, for instance, and again, all of these with no meat at all. And personally, I'm not a vegan or a vegetarian, I eat regular meat, but this does not mean that I don't also enjoy eating, let's say, plant-based meat. Not only it's a part of enjoying it more or less, but also in terms of sustainability, it is much more environmentally friendly to eat plant-based food rather than meat. In fact, according to a study published by the University of Michigan, in which they compared the environmental impact of the life cycle of producing a plant-based burger versus an animal-based burger, the positive impacts are substantial. The findings show that to produce a plant-based burger, you have 99% less impact on water scarcity, so it uses significantly less water. You emit 90% less greenhouse gas emissions, you have 93% less impact on the land use, and it requires 46% less energy to produce than the same amount of animal-based burger. So even if we might not necessarily have to fully switch to eating absolutely zero meat at all, and if we plan to continue living in this planet with the growing population and have enough resources to feed us all, I think that a good contribution to make would be to at least try to reduce a bit the meat consumption and then instead consume products like the ones that BYND produces. Not only I realize this, but I think that over the past years we have already seen a trend of people starting to consume many more plant-based products that maybe resemble meat, to kind of like move away from eating meat because they know that it's more sustainable. And in terms of growth expected, according to a study published by Technavio, it's expected to grow at a compound annual growth rate of 16% until 2024, increasing 3.11 billion in the market value of, let's say, plant-based products. So the market opportunity is there, and I'm not saying that BYND will capture all of that because this is absolutely unrealistic, but I do think that it will capture some percentage of it, and this will of course contribute to its growth in sales that, by the way, we will see later on. Talking about this, BYND, as we said before, is facing increasing competition, and some of the names that pop up here are, for instance, Impossible Foods, which, by the way, it's privately owned, so you cannot buy any stock of it in case you were wondering or you wanted to invest in them. Then we also have, though, other big multinationals such as, for instance, Kellogg's, the Kroger, Kraft Heinz or Unilever, among others, that they don't necessarily have their full business focused on that, but they do have brands targeting just the, let's say, plant-based meal revolution, and that's something also to keep in mind. In a way, we could compare Beyond Meat with Tesla in the sense that both of them have been pioneers in the industry, but now much more well-established brands are also getting into their businesses in the sense, for instance, of automakers, and these companies have a lot more money that they can spend on research and development and hopefully building better cars or, better plant-based products. This is a bit the theory. We think that if people spend much more on research and development, they should also be able to come up with better products, but it might not necessarily be the case. And for instance, with Tesla, with let's say a lower budget at the moment than other major car brands, like for instance Volkswagen, they are still ahead of the competition and staying strong. And I think that the case of Beyond Meat could be somehow comparable also to this. Something that I very much like about the company is its brand awareness and, let's say, positioning in the market. And I'm sure that this, what I will say now, will be different across countries, but at least I think that if you ask anyone in Spain or many people in Spain, if they know a brand that produces solely plant-based products, they will most likely come up first with Beyond Meat. At least this is my case. I'm not sure if everyone would agree with me, but I think that the fact that people associate one type of, let's say in this sense, plant-based products directly with a brand is super positive. Not only you can buy their products in supermarkets, but also they have partnerships with restaurants, and in the screen now you will see basically all the brands or some of the brands that they are partnered with. That, as you might have noticed, most of them are in America. But they are here in Europe, for instance, they are also partnered with the supermarkets of Lidl. On this topic, during the earnings call, they announced new partnerships with McDonald's and also Yum Brands, that in case the name Yum Brands does maybe not sound that familiar to you, they are the owners of Kentucky Fried Chicken, Pizza Hut, and also Taco Bell, among other brands. For McDonald's, they established a 3-year agreement in which Beyond Meat will be the preferred supplier of McDonald's McPlant, which is a new plant-based burger, and it says that they will also explore other alternatives. The Yum Brands partnerships includes offering products that will only be found in their restaurants over the next years. Personally, I'm really excited about both of these new partnerships because it will help Beyond Meat position its brand or create even more brand awareness. And as I already mentioned previously, I think that brand is one of the best things that Beyond Meat has, besides of course having great products. And with these partnerships, this brand awareness will increase even more. But let's leave this part of talking about the company and let's go now into the financials to see how they have been doing in terms of numbers. And looking first at revenues, we see that they had a year-over-year growth for the year of 2020 of 36.6%, which if we compare it with the growth that they had during the previous years and that you can see now in the screen, it is certainly much lower. Nevertheless, if we go to analyze a bit deeper the reason for that, we can easily see that it has been largely due to the effects of the pandemic. Looking at the revenues by segment and also geographic region, we see that although retail sales increased in more than 100% year-over-year, both in the US and internationally, the food service sales declined substantially, especially internationally. And by food service, it refers to restaurants or similars selling its products in their establishments. But now I would like to go a bit deeper into that and see what could have happened, or what would have happened, or could have happened actually, if we had not had the pandemic and we were in, let's say, a normal or a pre-pandemic scenario. And to do that, what I did was to calculate which were the percentages that the sales of retail and food service represented for the year of 2019, for which we did not have any pandemic. When doing this, I reached to 48.61% of the sales coming from retail and 51.39% from food service, which basically shows that more or less they are equally distributed, 50-50. This 2020, however, the percentages have been of 73.89% of sales from retail and 26.11% from food service. Taking the percentages of 2019 and basing ourselves on the retail sales that they reported for this quarter of $300 million, we could estimate that if things had stayed pre-pandemic, the revenues from food services could have been of around $317 million, and this would have brought the total revenues up to $618 million, or in a hypothetical year-over-year increase of 107.57%. Again, this is just a hypothesis, and considering that retail sales have stayed the same because the pandemic has not had either a positive or negative impact on them, we could agree that maybe a positive one, because if people did not go to restaurants then maybe they bought more of retail, but again, very similar, and that, as we saw already earlier on, food service were really impacted. But I want to stress out that this is just a hypothesis, that again, this has not happened, and that the real year-over-year growth that they reported for this 2020 was, as we said before, of 36.55%. However, I do this to show that, at least from my personal opinion, I think that largely they have missed on this revenue growth that they were having in the past years of more than 100% due to the effects of the pandemic. And I don't know when we'll go back to normal. I hope that very soon, but who knows. I think that Beyond Meat can very easily go back to reporting great revenue numbers and year-over-year increases of more than 100%. We will have to see, however, but these are just my thoughts, and this makes me actually even more bullish on the company. Leaving the topic of revenues though, and going now into the full income statement, we see that they reported once more losses. In this case, for the full year 2020, these were of $0.85 per share of loss again, and for this past quarter they were of minus $0.40 per share, while the estimates of the analysts before the earnings call were of a loss of only $0.13 per share, which means that they did much worse than what was expected. These results were mostly driven by increase in headcount because more people hired, higher costs, then also costs related with international expansion, higher also marketing costs, and also costs on product development as Beyond Meat tries to stay ahead of the competition. Going into the balance sheet, I really like it. It has very little debt, and its debt ratio is only of 21.56%, which is extremely conservative. And comparing it with the previous year, the debt ratio was even lower at only 14.94%, and even though it has increased substantially from the previous year, it's still at super conservative levels. So now, after having had a look at many different aspects of the company and analyzing different things, it is time for me to give my opinion on it. And I must say that, as I already advanced at the beginning, I'm very bullish on it. I really like the company, I like their products, I like their philosophy, as they are doing something that is hopefully getting more people to consume plant-based products, which is better for the environment and for our planet. And on top of that, they are in an industry that is getting more and more attention. More and more people are switching to either eating only plant-based, or at least trying to reduce their meat consumption, like for instance myself, and I think that this just offers a great opportunity for growth in the upcoming years. On the other hand, and as I already mentioned before, I think that we have two main challenges. The first one, that is also a bit related to the second one, but the first one is to keep innovating and having great products that are better than its competitors. And talking about competitors, I think that the competition is already very strong at the moment and will be even stronger looking into the future, and that's basically the main two challenges of Beyond Meat, as it needs to stay ahead of it. And also another thing is that it should not go into the battle of prices, because if you fight just for prices, then usually margins are very low, and that's something that me as an investor, I don't want. With that said though, I think that Beyond Meat is doing great marketing and has great brand awareness, and this is one of the main reasons I'm invested in them, leaving aside the product, because as we already said before, they have increased competition that has a lot of money to develop products that can effectively compete, that they are also very good and can compete, as I said, with Beyond Meat's one. But I think that maybe what might set the difference will be really the brand. At the end of the day, it's like everything in life. You can have very good products, but if you don't know how to sell, how to market yourself, it doesn't really matter, because you will probably get left behind. And I think that this is a very positive point on for Beyond Meat. Finally, just before I end the video, I want to mention that Beyond Meat did not give any guidance for this year 2021 in terms of revenues or anything expected. They said that given the unprecedented circumstances and the fact that they cannot predict what will happen with the pandemic, the restrictions, and so on, they basically gave nothing. And personally, I think that as long as restaurants are still closed, Beyond Meat will still struggle, as food service sales used to represent a very big percentage also of its total sales, and this also might be good because it can hopefully present us also with good opportunities to invest in the company or to increase our already existent position, which is certainly good, at least from my eyes. In my case, I own some shares at a cost basis of $123 each, and if it reaches again similar levels, I will very likely be adding more to my position, but at the moment it's trading at $147 each. Also note that this stock the valuation is very demanding. It implies that it needs to keep growing revenues at more than 50%. Hopefully, I mean, to be on the safer side, let's say 100% year over year. And if it really doesn't manage to do this, of course now we are in the pandemic, but let's see how it evolves after that. It could really hit the stock price, so just my thoughts on that. Nevertheless, this is the end of the video, and remember that I'm no financial advisor and that I do this just for fun. But what are your thoughts on Beyond Meat? Do you own some shares? Are you planning on adding more? Do you like the company? No? Let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.